Hello, everybody. Tortoise Investing. It is Wednesday, and we are coming at you with another one. Today is going to be 5 dividend stocks you can buy and hold forever. I did this about 2 weeks ago, as you can see, and it did pretty well. And there are a lot of things that are just on sale so hard that I feel like would be great long-term positions. So if you are new, please hit that like and subscribe button. We're currently at 155 subscribers. Let's keep growing that, and come Friday, let's have even more. And comment down below. Let me know if you hold any of these. Let me know if you have any questions or anything at all. I respond to everyone, and I just like communicating with yins. If yins are here just for what the 5 are, it is Union Pacific, not Union Pacific, blah, blah, blah. It is United Health, Dollar General, Automatic Data Processing, Next Era Energy, and Kroger. And the reason I picked all these, they have a 10% plus dividend growth rate, and I feel like they're on sale. If you came for just that, thanks for coming by. Don't forget to hit that like and subscribe button on your way out. Now, let's do an in-depth look at all of these holdings. So first up, we do have United Health Group. We're going to be looking at everything through Qualtrim here. Excuse me. They have a free cash flow of 5.2%. They have more cash than debt on their balance sheet, which is amazing. They have a dividend yield of 1.36%. Can't talk today. Payout ratio of 30%. All these are very nice, ticking all the boxes that you like to see. At one point, I do believe this ran up to about 540 area, so it's on a pretty big sell. Revenue, the EBITDA, the free cash flow, literally everything with this is ticking in the right direction. And I love this holding, especially at this price. This is too good. Let's take a look at the 10-year growth here. Yeah, over the last 10 years, this is up 786%. Absolutely insane. Now take a quick look here. This is their dividend growth rate over the last 5 years. They've been increasing their dividend on average of 17.36%. Absolutely insane. They've been growing that dividend for 13 years. So yes, a very good holding in my eyes. Next up, we got Dollar General. Dollar General is hovering around the 240 areas. They had a dip here recently, which I feel is a good buying opportunity. None of this is financial advice. Just putting that out there. This is all educational and entertainment purposes. But free cash flow of 1.07%, a little low on that side, but that is a-okay. The stock ticks so many other boxes. It's got a dividend yield of 1.03%, a payout ratio of 20%, so that dividend is in no danger of not being able to just grow. Their revenue, EBITDA, free cash flow, net income, EPS, everything's ticking in the right direction. Their bad debt quotations is around $3 billion. They knocked that out with their EBITDA, no problem. They're doing share buybacks. Their return on capital employed is above 15% very reliably. Another one of my I love this holding. I personally hold this one. Stay tuned Friday, portfolio reveal. Anyways, their dividend growth rate over the last 5 years has been averaging about 16.17%, which is pretty good. And they've been growing that dividend for 6 years. So yeah, I feel like this is a good consumer stock to have in almost any portfolio, especially at these prices. I really like Dollar General. Next up, we have Automatic Data Processing. If you've gotten pay stubs and things from your workplace, you probably recognize this little symbol here, ADP. It's got a free cash flow yield of 3.21%. It has got a dividend yield of 2.26%, a payout ratio of 58%. As long as this is below 65%, I have no worries whatsoever for any and all companies. That means it is healthy and more than capable of being to grow very quickly. So the revenue, EBITDA, their free cash flow, net income, EPS, everything, same thing as before. Everything's just going up. They do have more debt than cash, but again, right at $3 billion debt. Their EBITDA was $4.4 billion. Not a problem. They can cover that easily. Share buybacks. And the return on capital employed has reliably been above 20% for like the last 10 years. So I think this is a very strong holding. I really, really like this one. Let's take a quick look here at the 10-year, 307%. Let's go back real quick and check out the 10-year for Dollar General, 354%. So, yeah, again, very good growth, very strong dividend growth, as you can see here. 5 years, 13.31% dividend growth, very good. And they've been growing it for 48 years, so they're right there at that 50-year mark. And I know that they're going to hit that and become I think it's a dividend king. So, yeah, I think they got that more than easily got that in the bag. Next up is a utility. Utilities are a little bit different. They carry a lot more debt. Their free cash flow isn't usually as good as you would like to see. But when it comes to, if you're looking for a utility holding, I can't think of anything better than NextEra Energy, and especially at these prices, $70. Oh, it's too good. It's too good. I love it. It is down on the year, as you can see here. Again, not financial advice. If you're looking for a utility, I feel like this might be a good entry point with NextEra Energy. It got a dividend yield of 2.56%, payout ratio of 80.9%. Again, it's a utility. Utility companies, their payout ratios are usually higher, their debt's usually higher, and their balance sheets are usually all over the place. But yeah, revenue has been growing, net income, EPS is going in the right direction. Let's see here, last 10 years, 291%. So, I mean, pretty good, pretty good. They've got good dividend numbers, too. Over the last 5 years, 11.59% dividend growth average. Very good. And they've been growing that dividend for 50 years. So, again, if you're looking for a utility, you can't go wrong with NextEra Energy. It's like the biggest renewable energy company out there. So, look them up if you haven't, and especially if you're wanting to add a little bit of safety, because I feel utilities don't move as much typically. But next up on our list is Kroger. They have a free cash flow yield of 6.04%. They have a dividend yield 2.38% and a payout ratio of 29.5%. Very healthy, very, very healthy. I like to see that. Revenue, EBITDA, free cash flow, net income, EPS, everything seems to be going in the right direction, even though their EPS is a little flat-ish here. That is not a problem. So they've been doing share buybacks, and the return on capital employed looks like it is going up. 2020 hit a lot of us very hard, and it looks like they are back on track and ticking in the right direction. At one point, I do believe this was up to about $60. Yeah, this was up in the 60s, so it's down about $20. Maybe a good entry point. I like it, especially for its dividend growth. Oh my God! Check this out. Check this out. 5 year, 13.92. Over the last 3 years, 16.14, and 1 year, 20.51. What's that tell you? The dividend growth rate is increasing. You like to see, like, when these numbers are going up this way, it's a good sign. It's a very good sign. They've been growing their dividend for 16 consecutive years. So yeah, guys, that's what I had in store for you. Again, I think 3 very strong dividend stocks that you can buy it and forget it and come back in 10 years and just grin. Just grin real big that you held on to it. Again, if you're new, please hit that like and subscribe button. And as always, if you have any questions, let me know down below. And until next time, see yous.